Well, good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up, and this wrap-up is for Tuesday, and this is Super Tuesday. It's the 5th of March, 2024, and obviously we've got all these different primaries over the country going on. It's widely expected that President Trump will take the majority, if not everything, tonight. He still won't have the nomination. He's got to get a few more votes, but it's pretty much a shoo-in between him and President Biden, so we've got the 80s going at it again. All right, that'll be interesting. Michelle Obama today came out and said she has no intent of running for the presidency. She supports Biden and Harris. We will see what Nikki Haley has to say, but she has, according to the national news, no event scheduled for tonight. So she'll probably look at everything and make a decision, hard one for her, but I would expect that she's going to bow out very shortly. Other than the president being barred, she can suspend her campaign and always reopen it if President Trump is somehow barred from running for the presidency. That's a possibility. Other than that, I think we have an idea now where we're headed on everything. Now, this is a huge week and a difficult trading week. The market is now looking at all the jobs reports coming out. They're huge. We also have our Fed chair speaking tomorrow, begins speaking in front of Congress, 2 days that he's going to do this. So you start off at 6 in the morning with the mortgage bankers numbers, but then we get the ADP numbers at 7:15, and the market will look real hard at those. At 9 o'clock, look what we've got. We've got Fed Chair Powell in front of the House of Representatives Financials Committee. We got wholesale inventories. Then we get the all-important JOLTS number. How many openings for jobs are there? Are they slipping? Are they staying the same? We're going to get the beige book, and everybody will look for industry and how's that doing at 1 o'clock. And we also get all in between there the EIA stockpiles of petroleum products. You have a full day. And today what was going on was probably to a degree some evening up, but you did get loss of momentum to the upside in some stock indices. Now that happened in the futures market. We'll talk about what's going on here in a minute. You had a big run up in TLT. Amazon corrected a bit through here. If you take a look at Tesla, it recovered off the low, but still down another $7. NVIDIA doesn't care about anything. It just goes up. It was up again. The gold market managed to hold on to a gain. AMC holding the 450 level. Now, it could have gone back into that 398 zone. It didn't do it. The market is trying, and I think it's trying to base out here saying, okay, we're going to get a good spring, summer movie season, and maybe there'll be a few bucks to be made. But how much is the big question. Lyft still dripping down. That's the right word I want to use. Microsoft, I had been bullish on this. Not so right now. Now I think you got to walk away. In fact, many of the megas you got to walk away from right here. I think let them recoup and get their footing back. I think that's very important. So now let's take a look, if we could, at the first chart. We've been looking at Chesapeake Energy this week. You can see the distribution that's going on right through here. So in looking at it, the trend is still up. You haven't changed any of that. The market keeps coming back to the 200-day average in gray. This is the 100-day. You're liable to get a bullish crossover tomorrow as the 18-day crosses the 100. That's a bullish element. Even if you slip down, that could be a good area of support in the market. If it takes off, and I don't see reasons yet for it to do so, the 85.71 level, the upper Bollinger Band, would be a resistance. And are we embedding? That's going to be important. So both numbers were over 80 tonight. They weren't yesterday. So the answer is you're in an overbought market that is consolidating, but which way does it want to go from here? It hasn't answered. I tell clients not to deploy money in an overbought market. When we look at Lyft, does the market go back up now through 1763 and say this correction's run its course, it's ready to come back up? Or does it sink back and look for support at 1572? You're right at the point where it has to make that decision. In the gasoline fund, I think, just like in the futures lost a lot of ground today, but not bearish ground, just lost the upside ground. And I think you're going to spin. I think you've got good support at the 200-day average to the lower Bollinger Band. It's not a market that I would want to be short going into the spring, summer driving season. So I'm looking for opportunities on the long side, but they're not there at this point, nor are there short side opportunities. When we look at the financial services, they're holding up still beautifully. The market still has the embedded reading. Even the breaks in the other indices isn't taking this down. I think the pros are still nibbling on the long side, trying to get it back up to 40.89. If and when, eventually it'll happen, the red line closes under 79, then the momentum to the upside probably comes out. In XLI, be careful about tomorrow. You started to arc down today. I don't want to see it closing under 79. The trend has been up. It's done a great job. But tomorrow you're going to get the beige book, and we're going to find out how industry's doing in all these different Fed districts, plus jobs, plus listening to Fed Chair Powell. This has been a one-sided market. It's vulnerable. In AMC, you have no trend. You're just trading around the 18-day average of 455, waiting to see the event that is next. The consumer numbers are still good. If the red line closes under 79, then I'm going to be looking for 48.49. I think pros have been taking money off the table as it's been up at the upper Bollinger Band. And now the question is this pullback going to have any legs back up? And if it starts down tomorrow by much, you keep your eye on that red line. You're already at 85. You can be in trouble quickly if it starts down. In the home builders, I look for corrections to be bought fairly aggressively, like in gasoline. So it wouldn't surprise me if the market at some point wants to get a good-sized correction back to the 18-day average. But you're going to have people all spring and summer walking in with their checkbook. Hey, I got to build a home. I can't find one where I want it. I'm prepared to do blah, blah, blah. And the home builders as a group probably do well. Obviously, the Pulte's, those that are catered to the higher-priced homes, will do even better. In the energy sector, I don't know. It's confusing. I think this counts so much on what China does around the world, and they're not giving us what they're doing one way or the other. The gold is still strong, and I think a base has been formed in this market. We're looking at our company that if it wants to continue up from where you're at right now, another $50 rally over time is not going to be that difficult, back towards 2180, 2200. Silver market maybe a little bit ahead of itself. It's overbought here at the upper Bollinger Band and over it. Probably due for a little bit of a correction, in my opinion. Copper, a huge disappointment, and the market's showing that. The world's been waiting for China to give us numbers and how they're going to reach them. What they're doing is they're giving numbers and they're keeping everything quiet. In other words, here's what it is. It's a house of mirrors. Believe what we're going to say to you. And you don't have to worry. If the numbers aren't there, we'll make them up. I know you don't believe me, but that's what I do believe. And the market, it's called Dr. Copper. Notice how the market fought. Its battle at the 200-day average coming down. It's really not trending. It's whipping back and forth right here. BND, now I think the smart money took some money off the table in front of the Fed speech tomorrow and all this jobs reports that's going to come out. And the dollar still looks to me in a slightly bearish configuration, but it's very oversold, which means you're probably overbought as can be, and you are in the euro currency. So it's going to be an interesting day. At 9 o'clock in the morning, I'm going to review in the morning with my subscribers what I'm seeing with the morning reports. It'll probably come out about 9:10, 9:15. A little later, by design. I want to see the reports, be able to analyze them, then start coming out with everything that I'm seeing. And what I do is I discuss what's happened, how the market's interpreting, what's going on around the world, what's coming up later in the day. And these all rotate. I rotate everything all the time with it. The charts will look like that. 5 different studies, daily charts, and I'll mix in weekly charts with it, looking for confirmation, if you will, as to what the markets look like they might be doing. Try to come up with reasonable risk-reward ideas, throw them at you, and let you see what's going on. Now, the good news, my friends, I'm just about through with my charting course, which means I'm going back to special reports as early as this week. So we're putting together the new charting course. It's taken me 3 months to finish now. I began it around December. I have finally finished. Maybe I have a chapter or two to do, which is nothing. And we'll be ready to do that. I'll keep you informed as this goes on. You can go to iraepstein.com under the word research. That's how you can see all these different videos. Move your cursor to the top here and they're there. I'm Ira. You have a great day.